Hi everyone! We've got fresh earnings out of ASML. The numbers are solid, but the story's a bit more layered than that. Let's dive in and do a quick breakdown. ASML brought in 7.74 billion in revenue this quarter. There's a 46% jump year over year, but down 16% from the last quarter. Gross margins impressed at 54%, beating expectations. But there's a catch. Net bookings came in light at 3.94 billion. That's a sharp 44% drop from last quarter, hinting at softer near-term demand. On the product side, EUV continues to shine, up 8% quarter on quarter, with average selling prices hitting 230 million. But DUV revenues took a big hit, down 39%. Logic and memory segments also struggled, and China revenues dropped 19%, now just 27% of total sales. There's also some good news for long-term investors if we look at the dividend and 2025 guidance. Looking ahead, ASML guides Q2 revenue between 7.2 and 7.7 billion, pretty much in line with street estimates. Full-year guidance looks stronger, up to 35 billion in sales, with margins in the low 50s. Shareholders got some good news. Dividends are up nearly 5%, but the uncertainty is rising due to tariff and export risks. And now, let's talk tariffs. ASML flagged several potential impacts from new U.S. trade actions. These include delays or costs tied to shipping new systems to the US, getting spare parts into the field service teams, importing manufacturing inputs, and even exporting US-made tech to other countries. To manage this, ASML is already taking action to insulate its supply chain, shifting logistics, adjusting sourcing, and staying flexible. The good news? Despite all this, the company isn't adjusting its full-year guidance. That shows confidence in demand and in their ability to adapt. But it's not all clear skies. Tariff headlines and new export restrictions are starting to cloud the outlook, especially with China reduced demand and US regulatory pressure. So what's the takeaway? ASML fundamentals are strong, but we're seeing short-term caution around macro headwinds. If you're long-term bullish on chip demand and EUV dominance, this could be a story to keep watching. Alright, now let's have a more detailed look on the stock's price and also take a look at the bigger picture. How was the stock performing over the past decade and where might they be headed next? Now let's first zoom out. For this evaluation, I used the FASTgraph software. On the chart, you see the earnings growth in green, which is about 21% over the last 10 years. Over the last 10 years, ASML has traded at an average PE of around 35. This is shown in the blue line. Its long-term fair value sitting closer to 21 times earning, which is shown in orange. Right now, ASML is trading at a forward PE of 31.7 as given by the black line. That's below its historical average, but still above fair value. So it's in that interesting in-between zone, not screaming cheap, but definitely off its highs. Looking ahead, consensus estimates suggests earnings could be between 19 and 27% annually over the next 3 years. If those projections hold, the current price might look a lot more reasonable in hindsight. On the 3-year chart, you can see that the earnings growth is about 12% with a fair value of 15 times. This is almost half of what you can see on the 10-year chart due to some lower earnings last year. However, the prediction for next year is almost 27% growth. If the growth holds and geopolitical issues stabilize, This might be a decent long-term opportunity for those willing to ride the volatility. The margin strength is especially encouraging in the reaffirmed guidance despite the noise. Anyone else thinking this could be a buying window? Or still too rich in its current macro? I'm very curious to hear about the takes of other long-term investors. If you found this helpful, hit that like button and let me know in the comments if this one is on your watch list. Subscribe for more stock earnings and long-term investment insights. Thank you.